After about 6 years of this paper bear market in silver prices since 2011, it's looking like primary silver miners have finally hit a wall. And what I mean by that is I think they can no longer do both things in terms of maintaining current production levels and continue to cut costs. And they have been doing this, surprisingly, in my opinion, for years now. Larger companies, as I've done in previous videos a couple weeks ago with Coeur d'Alene Mining, since 2014, they have cut costs about 26%, which is an impressive number to cut costs. But the mining industry has a lot of fixed costs. There's also a lot of variable costs too, like oil prices and labor costs can change kind of quickly, especially if you're in a developing country. So there's a lot of costs there, and the fixed costs are the maintenance capital of the mine. And Steve St. Angelo over at the SRS Rocco Report, he put out, go to article, stunning results, 4 top primary silver miners production plummets. I've touched on this a little bit in either past interviews or past short videos, how a lot of the larger primary silver miners are either getting out of the silver business and adding gold mines. They're changing their name. They've brought on projects that have a large portion of revenues in base metals. But it looks like with recent earnings that 2 of the more well-known, more respected, lower-cost primary silver producers on publicly traded exchanges are having problems. So let's go to First Majestic Silver and Endeavour Silver, who both reported earnings the first week of August. First Majestic did some guidance that their production numbers were going to hit. Still, the stock lost about $250 million in market cap. The production numbers, as I'm going to read here in the article, I'll attach links to all these articles too, by the way. Silver production plummeted 16% as a result. The lower production usually leads to higher all-in sustaining costs. That's not always the case. It depends if you're high grading or not. But if you've been high grading for years, then this is the result. Because if you've been high grading for years to keep your margins, either improve your margins or maintain your margins, then you've run out of a lot of the high grade that you already had in the mining plan. So we knew that the primary silver miners at some point were going to hit a wall like this where they could not maintain high levels of primary silver production while the price was, either falling or going sideways or not rebounding strongly. And we knew that they were going to have to cut production levels at some point because of the low silver prices. So back to First Majestic Silver, their costs, they reported a 19% increase in costs, and this is affecting, basically everything on their balance sheet and their income statement. Their guidance was bad too as well. What's more, their cash cost has gone up. The cash costs are not the real costs. Got in an argument with a listener about this who kept calling me a moron. These are non-GAAP numbers. The cash costs are not the real cost of the mine. Doesn't count a lot of the additional costs for the mine. The best, most accurate, and even this is non-GAAP compliant, is the all-in sustaining cost range. And First Majestic Silver was producing at $12 or $13 an ounce last year. So they were very, very low cost. Their costs have risen up to $14.40, $15.50, according to this analyst, Gold Mining Bull, who's a pretty good analyst, although, now with the Sandstorm Gold deal with Mariana Resources, him and I disagree on that one. But First Majestic doesn't have an enormous amount of debt. But I think it's probably a pretty decent bargain, although a lot of people are selling it off here. They are, historically, long-term speaking, one of the lower-cost producers in the entire industry. They do have some costs rising, though, that are kind of out of their control in Mexico, with labor costs being forced higher. And also, they said some type of subsidy that they were getting from the Mexican oil and energy company, that's gone away. This rising labor costs, it kind of happens in a lot of places. But I just want to show you guys that I've been talking about this for a while. With the miners, we're going to eventually hit a wall where they could not keep the primary silver production levels at very high levels and maintain margins and continue to cut costs perpetually. It's just, you cannot do that at a mine. Anyone who's been in the mining business knows that that's not sustainable long term, that there was going to be a point where either the production levels were going to have to be cut, miners were going to go bankrupt. You can't keep cutting costs at a mine. It's not like a Warren Buffett type of business. that's a consumer monopoly. There's too many fixed costs, and there's also a lot of variable costs with commodities. And you have a case too with the miners where a lot of them don't hedge their energy prices. So if the energy prices are low, the miners don't hedge that either. The other one I wanted to show is Endeavour Silver, which is not the largest primary silver producer in the world. They're more of a mid-tier, although they eventually want to be a senior silver producer. But they had very similar problems to First Majestic Silver. Their silver production fell, I believe, 26% in the last 12 months. And their costs, as you can imagine, with the production cuts and fewer ounces being sold, obvious pressure on earnings. Company delivered top and bottom line misses versus consensus estimates. The all-in sustaining costs, guys, I'll attach links to this if you want to go more in depth, but I just want to summarize this very quickly. And the all-in sustaining costs increased 94% for Endeavour Silver. 94% to $20.46 an ounce. That's a big loss. Big loss. So there's more comments here with management. Sometimes management is brutally honest and takes responsibility. Other times they try to make excuses. I still like both of these companies long term, but I think what this is showing is that the primary silver miners have hit a wall. Now, this does not count the base metal byproduct guys, the copper miners, the lead and zinc miners who have silver as a byproduct, who have either sold silver streams to Silver Wheaton or they've hedged the silver price and they really don't care a whole bunch about the silver price. It's basically, an extra revenue stream for them. And then we've had, a bear market rally in copper prices, a really large one that I don't think is fundamentally driven, in my opinion. Probably some type of short squeeze. I don't think it's fundamentally driven. I don't think enough copper miners have gone bust. I still see a lot of new copper juniors planning new projects. So, until the primary silver miners are feeling a lot of pain right now, but until the base metal byproduct guys who produce silver, and they're about 66 to 70% of the market, the total annual supply of silver is from base metal byproduct silver mining. So until those guys either go out of business or cut back on production, there's still going to be a decent amount of silver supply available, but there is still a considerable amount of silver supply that is starting to come offline. It's not, 100 million ounces or anything like that yet, but it is sizable. And Steve St. Angelo covers that. So the key thing here to watch is not the primary silver miners are either diversifying out of the business. They realize that they can't do both anymore. We're seeing this in bad earnings. If you're a long-term contrarian value investor and you haven't bought either First Majestic Silver or Endeavour Silver, they're pretty interesting companies. They have a long track record of being in the lower quartile of costs for producers. I think basically, this shows that the industry for primary silver miners is very, very difficult. Basically, what I've been told by some executives who are in the gold mining business who looked at silver projects is, a lot of the silver companies are getting out of the silver industry, whether that's Silver Wheaton, Silver Standard, with their name changes. A lot of their revenue streams are going into gold because it's just easier to find gold mines that are more profitable at the current gold price, where gold is at $12.74. You have a lot larger margin in gold right now than you do in silver at the current silver price. Okay, well, that's it for today. I would really appreciate you guys liking and sharing this video. I think, if you do have a couple year time horizon for a trade for 2 or 3 years, for the mining shares, it's very dangerous to be a long-term investor in these things. It's better to be like a speculator and willing to hold this for a couple years at least. And there's a good chance with First Majestic Silver down to around $6. And EXK is down substantially. You have a good chance to double your money in a few years if you are patient, because these management teams do have good long-term track records. And normally when they have a bad quarter, the management team over a quarter or two can fix things. So they have the track record of doing that. These and their balance sheets aren't loaded with debt. So that's it for today's short little video. But I think the main point to be made, and Steve St. Angelo covers this in depth, and I think you see more evidence of this with First Majestic Silver and Endeavour Silver's recent earnings releases the first week of August, is that the primary silver miners have basically hit a wall. They can no longer do both. During this paper bear market in silver prices, they can no longer maintain high levels of primary silver production and also continue to cut costs. So they basically hit a wall. Wall Street for Main Street needs your help. YouTube stole $7,200 from Wall Street for Main Street in annualized YouTube AdWords revenues, and they kneecapped our analytics down by more than 80% across the board since September 2016 with their new censorship algorithms to stop the rapid growth of our channel. That was money we could have used to upgrade our website, pay bills, and invest in improving our content and growing our business. Our audience of loyal listeners is all over the globe and so large now that if most or all of our listeners were to commit to donating $1 to $5 each month to our Patreon account, we could easily meet our goal on Patreon. Wall Street for Main Street also accepts one-time donations on our main wallstreetformainstreet.com website. That's WALLSTFORMAINST.com website via PayPal, Gold Money, or Bitcoin. We also accept donations of physical precious metals that can be mailed to us. Thanks to all listeners who have already made a donation, and thanks in advance to any listeners who make a future donation or contribution to the growth, improvement, and success of Wall Street for Main Street.